2017 Committee of the Whole. Clerk, would you please call the roll?
Calling the roll for the reconvening, Ms. Baker? Mr. Miller?
Here.
Mr. Tuma? Mr. Tuma is absent at the moment. Mr. Gallagher? Here. Mr. Schron?
Here.
Ms. Conwell?
Here.
Mr. Jones? Mr. Jones is absent at the moment. Ms. Brown? Ms. Brown is absent at the moment. Mr. Hairston?
Here.
Ms. Simon? And Council President Brady.
Here.
There is a quorum.
Thank you.
Thank you.
We're going to continue the discussion that we were having at the end of the last meeting of the Committee of the Whole. Of course, we want to welcome everybody and thank you for coming again. If this is your second or third time or fourth, if it's your first time, welcome to the County Council's meeting. We've exceeded capacity once again, so we appreciate your patience and understanding. We've installed monitors outside the chamber for this meeting, so those in the lobby can view the meeting, and our committee rooms are once again available for overflow seating. We are resuming the committee where we left off last week. We're going to start with the presentation from Tim Oftermatt on the financials of the proposed project. I know there will be a lot of discussion by members of the council, and I encourage them to speak up and ask questions as we go along, and that is to say, as Mr. Oftermatt gives his presentation, if there's something that he says that you want to ask a question about at that time, let's not wait for 20 minutes later and try to go back and look for it. We'll stop and try to answer that question. There are obviously many areas to go into here, and we will exhaust the subject. We would ask the audience members to refrain from any demonstrations, or just a reminder, this is not a public call. This is not a public meeting in the sense of this is the council meeting and not a town hall meeting. This is not a demonstration. This is not a political rally. This is the public's business. And this is turning out to be, in this county as it's evolved with the new county government, the biggest Democratic forum in the county. And this issue has brought out more people than any issue up to this point. So we are testing and learning how we deal with an issue this big and with this much interest by so many people. So we really appreciate you coming out. Sometimes we've been a little lonely down here. Don't feel that way tonight. And we'll do the best we can, and our job is to try to get at the facts of this proposal, and then it will be up to the 11 members of this council to get their questions answered, as many questions and as long as that takes, and I don't mean just today, and then it will be up to the 11 members of this council to support this proposed amendment, this proposed project, or amend it, or not. And that's what we're engaged in here. Again, for those who wish to speak during the public comment, we may have time at the end of this committee of the whole to hear from some of you, but we have a council meeting to begin at 5 o'clock, and so it's possible, you should be warned in advance if you weren't warned already, that if you want to speak, you may have to wait till around 6 o'clock at the end of the regular council meeting to do that. And that may come as a surprise to some of you, but I want to tell you at 2 o'clock rather than 4 o'clock or 5 o'clock that that's the case. We will have time at the end of the regular meeting for public comment from anyone who is able to speak following this meeting. Again, all of our meetings are live streamed and archived on the council's website. If you are parked in the attached garage and need your parking validated, the clerk's staff can assist you. And with that, we will begin a return to the meeting of last Tuesday with Tim Oftermatt. And Tim, if you'll sort of start at the beginning again. That was a long meeting last time, and I think we would prefer to start at the meeting so we can have focus on this issue as we go through and be prepared for questions at any point along the way.
Thank you, Mr. Chairman. Members of the committee, thank you for having me back. My name is Tim Oftermatt. I am a managing director of public finance at Stifel Nicholas here in Cleveland. I also happen to be the county's financial advisor. And I'm here today serving in that role. I did participate in much of the discussion with the Cavaliers as it related to preparing this agreement as it sits currently, and will be happy to answer whatever questions you had. And please stop me as I'm making my way through this. I'll do my best to answer whatever questions.
To members of the council, just try to indicate to me that you have a question so we can.
And Mr. Chairman, would you like for me to briefly reiterate some of the points that I made last time? It was late, I understand that. In terms of assembling these arrangements that are being presented for your consideration at this point, what our county team attempted to do was identify revenues with a direct nexus to either the arena or to travel and tourism in Cuyahoga County. Those are the revenues that we identified to play a role in that. A number of those revenues also were and continue to be a part of the original Gateway financing arrangements, many of which were assembled as far back as 1990 and have been refinanced along the way. I am sorry to say that I date that far back with this project. The sin tax, the countywide excise taxes on cigarettes, liquor, beer, and wine are not part of any of these arrangements. In case any of you are wondering, we determined that since those taxes were levied specifically related to capital repairs that were related to the original leases, and that's what those revenues are being utilized for, they are not part of these arrangements. Quickly, I'll note again some facts as it relates to Gateway. Gateway is a not-for-profit entity formed by state statute back in 1990, and an agreement, a cooperative agreement between the city, the county, and Gateway back in 1990. Cuyahoga County, nor the city of Cleveland for that matter, have any legal responsibility to fund anything related to Gateway, at least not at this time. The facilities do revert to arena to the county, ballpark to the city. Public spaces, the so-called common areas of Gateway, can revert to the county. If there is no major league tenant in the arena, the county can also act on its own in cooperation with Gateway to take over the arena if it were to ever choose to do so. Finally, it's also of note that the original 1992 financing arrangements for the arena carry a mortgage that's held by the county. So under certain circumstances, the county can act on that mortgage as well. The original lease with the Cavaliers, between the Cavaliers and Gateway, was December 1991. It expires by its terms, or it's set to expire by its terms currently in 2027, at the end of the, basically at the end of the basketball season. In 2027, this particular agreement contemplates extending the final term of that lease to the same date in 2034. The county entered into a number of financing arrangements back in 1992 and 1994, and also 1995 related to the original construction of the arena. That bond debt service, which averages about $8.6 million a year and is an obligation of the general fund. Those obligations reach their final maturity June 1st, 2023. Under the current Cavaliers lease, the Cavaliers fund all operating costs at the arena. They fund capital repair costs as defined in the lease, up to $500,000 for any single occurrence. They also pay the property taxes on the arena land, and they pay roughly half of Gateway's security, cleaning, and maintenance costs on the common areas. That's all encompassed in the base rental payment that the Cavaliers pay to Gateway, and in 2017, that's budgeted for about $1.8 million. I'm prepared to answer questions that you may have related to any other financing arrangements for other sports facilities around Major League Sports, particularly as it relates to arenas, if that comes up. I do have some experience with that over the years. I'll save those comparisons now for any questions that you may have. I'll summarize. Yes, Mr. Chairman.
You can finish your sentence.
Okay, I would just summarize that comment at this point by noting that my view of this arrangement that's being presented to the council at this point is representative, if not, at least representative, if not better, than the financing arrangements 2022 or so over the last 12 or 15 years, mostly done in this current century. Mr. Chairman.
Councilwoman Conway.
Through the president to Mr. Arthur Math, can you, I'm looking at your chart here, can you describe the differences between the cooperative reserves and the county reserves?
I'd be happy to. If the chair pleases to the councilwoman, we can get right to that. The arrangement itself features three primary silos of revenues and then debt service uses. The county, these arrangements suggest, would be the bond issuer. County sells bonds as it typically does, whether it's for a bridge or this project. County sells bonds to investors. Investors buy the bonds, provide the money for construction of the project. In this case, Gateway is going to be the county's agent constructing these arrangements in a way similar that Gateway serves with regard to the Syntax capital repair funding. The three silos involve a tax-exempt bond issue that's funded by some county revenue and also a 1.5% countywide levy of the bed tax. There's a separate silo, if you will, with some other monies, taxes that are more specifically generated by the arena, including admissions taxes that are generated at the arena, some of which related to a current agreement between the city and the county, monies that the county would agree, subject to your approval, to redirect from its payment of current debt service to the payment of debt service for this. And then this agreement would also include the city's agreement to extend the current admissions tax sharing agreement from 2023 through 2034. Finally, the last silo, which is on the right as you're looking at this screen, would be additional rental payments paid by the Cavaliers. They would be paid through Gateway. They would be paid as rent to Gateway. Gateway would then make funnel the money to the county for payment of the bond debt service. Again, the net sale proceeds of the bonds would be provided to Gateway through a regular set of requests for construction draws. Those payments would be made by a county-appointed bond trustee, commercial bank, would be made to Gateway. Gateway would then certify that the construction proceeds were being spent appropriately and according to Gateway's inclusion policies. Mr. Chair, did I not do that right? I didn't. To the Councilwoman, Councilwoman Conwell, would you like me to continue to describe the respective reserves at this point?
You can. I'm still hung up on this admission tax. I'm just not.
Is there a
clear on
question
that,
I
but
could?
we can come back. Maybe it'll get answered.
Okay. Let's go back here. The silo on the left, the county's forwarding of monies that are in the subfund for the 0.25% sales tax. Now, this is a subfund that basically captures all the flow of funds activity for the Hilton, for the Convention Center, and for the Global Center. Now that those projects, except for the tunnel, are largely complete, and there's some expectation of sources and uses related to that project on a going forward basis, as we discussed with Destination Cleveland, the application of the 1.5% bed tax on this, and it became clear that we were going to backfill this revenue. The construction and operating risks were such, and the growth in certain of the revenue streams were such that we felt that the risk was warranted of applying some of these funds to this use. So revenues available, it funds debt service. We would know upfront the payment schedule of the 1.5% bed tax would be a payment schedule, a set schedule of revenues. So would the amounts of money coming from the 0.25% subfund. So we would know at the very beginning how much revenue there was going to be available and how much debt service was going to be required, and then how much money there would be available for deposit into the so-called county reserve. The second silo, this gets a little bit more complicated.
Councilman Harrison, would you like to ask your question at this time, or are you comfortable waiting?
So, but as you move along in your presentation, one of my questions is, as it stands now, what do we project the balance in this so-called cooperative reserve to be? So that would be the first question. I'm sure you'll answer that as you move on. Then the second two questions will come into play after that point.
Okay, very good. Mr. Chairman, I'll continue. This second silo identifies certain tax revenues available to the county right now. The county, the arrangements currently suggest that admissions taxes that are generated from arena playoff events would be made available to the payment of debt service for these bonds. If there are no arena playoff events, there would be no money made available for the debt service on these bonds. The identified amounts are from the admissions tax. Currently suggested that there's a current agreement between the city and the county that dates back to 1992 that extends until the final maturity of the current bonds. If the Cavs, or if there are playoff events at the arena, and it's not just limited to Cavaliers playoff events, but if there are playoff events at the arena, those admissions taxes from those events could be identified, and they would be made available for these particular financing arrangements. If there were no financing arrangements, if there was no agreement between the county and the Cavaliers for these improvements, those monies would be available to pay the county's existing bonds. To put some context to it, this estimate should be close, probably not exact, but it's likely that the admissions taxes just for the Cavs playoff games in 2016 generated about $2 million. Now, obviously, playoffs are not guaranteed, even though we may want them to be, but playoffs are not guaranteed. So if it's not there, there's no impact on the general fund. But if it is there, there is a potential impact on the general fund. Similarly, this set of cash flows includes an amount of sales taxes that we describe as incremental sales taxes. Works similar to tax increment financing that some of you may be familiar with. County's done some of that over the years. We identified a baseline sales tax revenue amount, which is $250,000. That's the estimate of the 2014 amount of sales taxes paid by all activity in the arena, from patrons, from Cavaliers vendors, from arena vendors, etc. About $250,000 in 2014. Whatever amount of sales taxes there are that are in addition to that, as these cash flows proceed forward, those would be available to pay the debt service on this project. In addition, finally, the city and the county are working on an extension of this.
Excuse me,
Yes.
Tim.
Sorry,
Councilman
Mr. Chair,
Harrison.
so you said 2014, $250,000 from sales tax initiated inside of the arena, correct?
Mr. Chairman and the councilman, that is correct.
So the numbers that we've seen, we're estimated to be $300 to $650,000 during the period of this, I guess, particular deal. And so apparently the Cavs organization, the others stand behind those estimates, that seems to be what they believe the additional sales tax inside of the arena would be. It just from 250,000 now estimate to go from $3 to maybe upwards of 650,000 seems a bit of a jump. Is that realistic, or that's just high hopes at this point?
Mr. Chair, to the councilman, the again, not exact, but a fairly reasonable estimate of the amount of sales taxes paid in 2015 was about $650,000. Now, I'll explain in a minute, as the chair pleases, how the Cavaliers stand behind these estimates, and I'll get to that in a second.
Okay. All right.
the agreement between the city and the county related to the same admissions taxes, same formula, same application, would extend the agreement from mid-2023, the current expiration, through 2034. These bonds are expected to have a final maturity payment January 1, 2035. The admissions taxes will be what they will be. As a point of context, in recent years, very recent years, last 2, 3 or so, the amount of admissions tax has been plus or minus $5 million a year that's come to the county. In 2016, that number was 7.3 million. Again, playoffs. The Cavaliers have ticket prices, and of course the arena events have attracted a lot of folks. The arena's been very busy. That's been documented to you previously, one of the busiest in the country and the world. The Cavaliers have worked to bring their ticket pricing in line with their peers, and maybe to better reflect the success that they've had recently. Cavs can talk about this themselves, but ticket pricing there probably lagged in general peer group competitors of theirs. So you've got these respective sources in this silo that are available, if they're available, to pay debt service. We'll know what the annual debt service is. If there's insufficient funds to pay debt service in any year, the county and its trustee would look to the cooperative reserve, possibly in certain cases the county reserve, and if there's insufficient funds in the reserves to pay the debt service, the Cavaliers would write a check to cover the shortfall.
Thank you. I believe we have a follow-up question by Mr. Harrison and Councilwoman Simon as well.
Okay.
I'll do my best to
You have
get
somebody
you on
to
the
the
list.
right of you also. So you just touched on one of the other points. So my question was going to be, what happens if the sales tax generated inside the revenue does not yield what we believe it will? So then do the Cavaliers immediately begin to pay the shortfall, or do we begin to draw down from that reserve? And at that point, after it's depleted, then we move on to, then the Cavs kick in to help out with those payments.
Mr. Chairman and the councilman, that's exactly right. That's the chronology of events as we've set it up. Revenue, debt service. If the revenue's not there, look to the reserves. If the reserves and the county reserve may not be available under certain circumstances, if it's used for another sports facility, for example. But if there is insufficient money available in the reserves, then the Cavaliers cover the shortfall with a payment of contingent rent, which will be identified in their operating lease, and if that rent is not paid, then it would be a breach of their lease and would be subject to enforcement in a court, as that would be one of the Cavaliers' obligations that would be subject to specific performance.
Sure, and still following that same line of question. So when we talk about project overruns, we talk about costs that may exceed what we believe it to be, what we would like to do, the renovation to the arena. Will those cost overruns also come out of reserve, or is that paid separately?
Those, Mr. Chair, to the councilman, those would be paid separately. The Cavaliers have agreed to cover any and all construction cost overruns, and they would pay those separately. Those would not influence or be influenced by any of the reserves.
Thank you. And Mr. Chair, my last point before going to my colleague, part of your discussion, you mentioned that the emissions tax into 23 is currently being paid on the current debt that we have out there. So what happens if City Council says no, and City Council says we won't extend this? What happens at that point?
Mr. Chairman, to the councilman, I think if City Council says no, then this project will not go forward.
Won't go to market. It hangs on the vine and it doesn't move.
The county, no. The council can decide to do as it chooses. If the county were to ask its financial advisor what to do, which you don't have to do, nor do you have to listen to me if I make a recommendation to you, but it would be my recommendation to not go forward if City Council said no.
Thank you.
Councilwoman Simon, and then we're going to Councilman Schron, Brown, Miller, and Baker, just so we know.
Thank you. So will the 250K baseline increase with inflation going forward?
Mr. Chairman, to the councilwoman, no. The base stays the same through 2027. The base actually falls slightly. In 2027, it falls from 250 to 200, I think, because that's the date that the 0.25% sales tax expires, and we just couldn't assume that the 0.25% sales tax would continue.
So just a question and a follow-up. Did I hear you say that the reserve would be used if there's a shortfall? But then I heard you say unless it's used for another sports facility. Did I hear you say that?
Mr. Chairman, Councilman, there are 3 reserves in the transaction. There is a county reserve, which for purposes of lack of creativity on my part, let's call County Reserve A and County Reserve B. And then there's the cooperative reserve. County Reserve A is a reserve fund that is initially funded by residual revenue from the left-hand silo, the county source, the 1.5% bed tax minus the debt service. And it's also funded by whatever monies may be available from the city's extended post-2023 admissions tax generated at the arena. If there is an agreement between the county and some other entity, as far as I know, and I don't profess to know for sure, but as far as I know, there have been no discussions between the county and any other entity for any other sports facility improvements in town. But our group thought it prudent to establish a fund in case such a need arose. So those monies would be available in what we're calling a sports facility reserve. That's County Reserve A. After 2023, there may be other residual funds that would be in County Reserve B that would not include the extended city admissions tax, but would include residual monies from that left-hand silo. Those monies could be available to cover debt service shortfalls, including on the cooperative bonds. And could also be available to pay final year debt service.
A follow-up to this, how much do you anticipate would be in County Reserve A?
Well, if things go well, there could be an accumulated amount of money as much as $40 million or more over the years if things go well. It will be what it will be. However, there's no guarantee of a minimal amount. There's also, as I said, as far as I know, no agreement with anybody else. So that would continue to fall to County Reserve A to the extent that there is no agreement with another sports facility regarding another sports facility. Then the monies on an annual basis, except for the extended city admissions tax, would fall to County Reserve B.
Talking about other facilities, we're talking about either the stadium or Progressive Field, right? What are we talking about? I'm
Well,
assuming there's three, right? So,
there's three, so it would likely be one of the three.
okay, just for clarity, because if, we're not talking about a new arena for the Barons, or what's a hockey team, I'm sorry?
The Monsters.
Fosters. So lastly, I keep getting calls from my constituents. Sorry, I'm not a big sports person, so my questions all go to the bottom line. I keep getting calls about us giving this money to Dan Gilbert, this money's going to the Cavs. In layman's terms, this is going to our public building, right? The Cavs don't own the Q. I just want to get back to the basic. You've said it, but I keep getting calls about this, that somehow we're giving money to the Cavs and Dan Gilbert, and this is his building. This isn't the Cavs building.
Mr. Chairman of the Councilwoman, the building is owned by Gateway until you decide that it's not. You being the county. So it's, well, unless you decide to sell it to a private entity, it is public and it would always be public. And this additional reserve, this other sports facility reserve, well, all three buildings in town, all three major league sports facilities are owned by the public. And it's the county that's determined to raise that extra revenue and set it aside as seed money or potential money available for potential application.
So
to a
we're
future
ultimately
project.
responsible for this structure, correct?
Well, Mr. Chairman of the Councilwoman, I would say that Gateway has no money for these kinds of projects. So, and for the last 30 years, the construction and the larger ongoing capital repairs have been left to either Cuyahoga County or the city of Cleveland.
Okay. Thank you, Councilwoman Simon. Councilman Schron.
Thank you, Mr. President. Mr. Alderman, you presented that same argument a few years ago when we had the syntax, did we not? That the county is ultimately responsible because the building belongs to us. Is that, it just seems to me, I remember you standing in front of here and you were the president or chairman of Gateway at that time.
Mr. Chairman of the Councilman, I'm sure you remember correctly that I was here. I think it is a true statement cutting through all of the nonsense that, with all due respect to Gateway, but it is the county and the city that have generally taken responsibility for the sports facilities. But I just want to reiterate, and I hope if I didn't say this at the time, I should have. I always tried, and yes, I was the board chair of Gateway at the time, that the county has no legal obligation to fund anything related to Gateway, nor does the city.
No, but we did, in fact, to Ms. Simon's question, fund with a syntax, the maintenance, the service, the roof systems, the scoreboards, all those things that are being talked about in the syntax, did we not?
That is correct, and subject to your continued approval, you will continue to do that through the end of the current levy of the sin tax in 2035,
which is,
which
will run till? 2000
which runs through July 31st, 2035.
So that'll take care of all the service, all the maintenance, all the windows, plumbing, everything in regards to the maintenance of our assets. Is that correct? Or should, if we did it, if we funded it correctly, right?
Mr. Chairman, to the councilman, it's my view that the syntax, and I believe I've said this before as well, that the syntax is, and there's no absolutes for sure, but that the syntax is not likely to be sufficient to fund all of the capital repairs that the leases describe, including in the Cavaliers amended lease, from here through 2035. It is not likely that the syntax will be sufficient to do that.
Okay, so when we talked about passing in the first place, that was what I thought we were actually presenting, was to cover the cost of maintaining the buildings and service at the time.
Mr. Chairman, to the councilman, it should cover a goodly amount. The syntax currently generates about $13.6, $13.7 million per year. It is planned to be split roughly equally among the three buildings, which generates, I'm sorry, 16.7. I said 13.7, 16.7. So there would be roughly $4 million a year for these purposes, give or take. And it's, my estimation is that will not likely to be sufficient. Maybe, but I doubt it.
Okay, well, we do have funds in there to cover the service on it. It just
And you
sounds to me
recall
as-
also that the county issued bonds in 2015 to cover a goodly amount, about $60 million of repairs at the ballpark and the arena.
But you're not standing here telling us now we got to pass this in order, because to cover the maintenance gap that we left out of the syntax that we just passed 2 years ago?
Mr. Chairman
what
and
you're-
Councilman, no.
Okay, so those are two separate arguments you're creating. You're kind of mixing those two together. Sounds like a little bit. So the gap is going to be the gap if we underestimated it, irrespective of what takes place on what we're talking about in this resolution. Is that correct?
That's correct.
Okay, thank you. We are creating a fund. Let me see if I understand the sports facility reserves
That is correct.
for a team that we haven't talked to about a stadium that we're not talking to the owners on, but yet it's going to have $40 million in the fund. Is that correct?
Mr. Chairman, to the councilman, certainly correct on the first two. Whether it has $40 million in the fund or not sure.
I'm just using your number that you just used a few
But
minutes ago. Yeah.
it may generate that, yes.
Yeah, it was, I think that
Over
was the
time.
number. Yeah. And it strikes me as interesting that you would be funding this with public dollars today for an expectation that we don't even have a conversation yet with somebody out there. It just strikes me as being something that would I be putting money into my mortgage for an addition on a house that I don't even have an idea of whether I need it, but yet we're going to be asking the taxpayers to put that money in advance. Is that correct?
Mr. Chairman, to the councilman, that is
you paying for
correct,
that?
although it's not expected to be spent. It would remain, at least the admissions tax portion, the extended admissions tax portion, would remain available. The other monies could be available to pay down on the debt service here if there's more rapidly than what we're expecting. But I would say, even though there have been, at least as far as I know, no conversations, the Indians lease expires by its terms in 2023.
It just seems bizarre to me that you would be putting money in the bank for something you haven't even had the conversation with the person as to what the amount of money you should be putting in the bank, because we're going to be borrowing money, going out and getting bonds, paying interest, putting money in the bank, maintaining all that, and asking the taxpayers to do that. But it just seems like,
Mr. Chairman, as a point of clarification, we would not be bonding the amounts in the
Okay.
sports facility reserve. That would just be cash.
that's just cash coming out of it. Okay, thank you
That's correct.
for clarifying that. Okay, so that's not part of the bonding. The other reserves that we're talking about that potentially, I think Reserve B, if there is a shortfall, the Cavs can go into that to make, to draw down? Is that what I understood?
Mr. Chairman, to the councilman, in certain circumstances, the answer to that is yes.
Okay. If we have not built those reserves up to the point where there's enough money to cover that, should there be a shortfall? Should there be a strike by Major League, by National NBA basketball out there, there's going to be a gap in funding. Is that pretty logical?
It certainly could happen, yes.
And if that gap were to be created, can they then come into those reserves that you just talked about, even though they don't exist? Can they give us an IOU saying that when those reserves are built up, that they can be repaid for any of those gaps that would take place if a strike were to occur or anything of that nature?
Mr. Chairman, to the councilman, there are ways that if they have written a check for contingent rent at the end of the schedule, if there's money left in the reserves, that those amounts could reimburse them for contingent rent that they've written a check for. However, if there never is anything in the reserves, they are writing a check, period.
Right, but let's go fast forward, then we do have the reserves built up. Can they then come back with that IOU and claim it if it was paid prior to us building those reserves up?
Mr. Chair, to the councilman, yes.
So they could have a shortfall. When we're telling us that they're going to cover those shortfalls, the reality of it is we're going to cover the shortfall when we build those reserves back up.
Mr. Chair, to the councilman, I would say that if there's never reserves, or if the reserves are being funded and there is a need for them to write the check, they'll write the check. But for the presence and the availability of those reserves, we would not have been able to engineer an agreement with the Cavaliers where they support the debt service on the cooperative bonds, which is, I would say, an unusual agreement as these sports facility arrangements go.
Okay. Well, my other questions involve other parts of your forecast, so I'll stay off. These were the reserve questions, so I'll come back to other questions. Thank you.
Okay.
Now we're going to go to Councilwoman Brown and then Miller.
Thank you, Mr. Chair. Many of my questions were already asked and answered with the exception of one, and that was you stated that the playoff revenue or tax, admissions tax would be not limited to the Cavs making the playoffs. So what other?
Mr. Chairman, to the councilwoman, that would also include the hockey team or the arena football team that have each played in the postseason in the past.
Councilman Miller.
Mr. Chairman, to Mr. Oftermatt, regarding the cooperative reserve, suppose that things go very well and that money accumulates in this reserve and it's not required to pay debt service, not all of it, and at the end of 2014, there's some money left over. My question is, who does that money fall to and when, and what can it be used for?
Mr. Chairman, to the councilman, the money in the reserves that is not the sports facility reserve can only be used to pay debt service. Now, it may come back and reimburse for debt service, but it can only be used to pay debt service, whether it's cooperative debt service or the lease bond debt service.
But if you've paid all the debt service and there's been more money created from its funding sources than you need to pay the debt service, what happens to that money?
Mr. Chairman, to the councilman, if we've gotten to the last year, the last 2 years of the schedule, and there's money in the cooperative reserve, the cooperative reserve would be used to fund the debt service of the cooperative bonds or the lease bonds at that point, and the debt service would then be gone in those cases. The county bonds would be paid off. County guarantee on those bonds would be gone. But similarly, the tax revenues that would be available in those last few years would likely go back to be used by the county if there's an arrangement on another sports facility, because there would be no cooperative debt service, so the admissions tax money would be available. It is conceivable, in fact, likely by definition, in fact, the incremental sales tax would come back to the county general fund at that point, unless there's a new agreement with a new tenant for the arena at the time. But basically, the revenues identified for the cooperative bond debt service would go back to their prior purpose. As it relates to monies in the cooperative reserve that may be used to pay the last couple of years of the Cavaliers lease bonds, that would relieve the Cavaliers of paying additional rent in that case if those monies had been accumulated, would also pay off county bonds in that case. So that's what would happen in that event. If there's money a year or two remaining in the debt service schedule, the money would be applied to pay the last year or more of debt service.
Did I hear, Mr. Chairman, Mr. Aftermath, did I hear you correctly that in some circumstances the money from Silo 2 could be used to pay the Cavaliers' debt in Silo 3, reducing the amount of rent that they have to pay?
Mr. Chairman, to the councilman, yes, you did hear that correct, and that may take place pursuant to the agreement that we're presenting to you only after year 2031.
So that means the 50-50 split is only an estimate, depending on how the funds flow. The Cavaliers could get some of their half covered from the public side.
Mr. Chairman, to the councilman, that is correct. However, looking at it on the flip side, in the extreme, if there's no money or very little money, and the Cavaliers are writing checks of contingent rent, and again, looking at this in the extreme, which is highly unlikely, the 50-50 split could conceivably flip to roughly 25% public, 75% private. Granted, that's in the extreme.
In the extreme, yes. Mr. Chairman, Mr. Aftermath, is it correct that if the county chooses not to extend the sales tax after 2027, that the amounts listed under arena sales tax increment 2028 through 2034, estimated totaling $1 million or more or less, that those monies would just not be paid into the fund, and is that correct? And if so, what impact would that have on the funding of the project?
Mr. Chairman, to the councilman, that's not exactly correct. What happens in 2028 is that the base value that's used in the calculation of the sales tax increment is reduced because we're assuming that the sales tax is not extended, but that does not change the agreement related to increment at the time being paid toward the bonds, or potentially being, if there's sufficient funds, being paid into the cooperative reserve.
So, Mr. President, Mr. Offermatt, this increment isn't just paid off of the 0.25% sales tax, it's paid off of the whole county sales tax, which currently is 1.25%, but starting in 2028 might still be 1.25%, but could only be 1%. Is that correct?
Mr. Chairman to the councilman, that's correct.
Okay, thank you. Regarding the any agreement that we might reach for relating to another sports facility, is there any particular time frame that we cannot make an agreement before such and such a date, or we can't make an agreement after such and such a date, when we would lose partially or totally the ability to use the county reserve for that purpose? Or can we do that whenever we want?
Mr. Chair, to the councilman, to the extent that there is not an agreement in any given year, monies that are deposited in the county reserve A, which would become the sports facility reserve, those monies for that year and that year only are then deposited into county reserve B. But there are no restrictions on how early or how late the county can make such an agreement related to another sports facility.
So now County Reserve B can be used for what?
County Reserve B can be used to pay debt service on the cooperative bonds.
So how do we get, and again, I'm just using your number and realizing that it's speculative. But my question is how do we get 40 million into the sports facility fund? Because I'm presuming that, well, let's say that in 2017, 2018, 2019, and 2020 and 2021, that there was no agreement, and so at the end of each year, that money got deposited into County Reserve B. So then it's the beginning of 2022. It's the year before the Indians' lease expiration. We want to make a deal relating to a new facility, but all the money has been transferred into County Reserve B. So where do we get the money to do the deal?
Mr. Chairman, to the councilman, we'd have to look for new sources.
So are you saying that if we're going to get the full benefit of the alternative facility reserve, that what we need to do is to make a deal now and commit those resources so that they don't get transferred every year into County Reserve B?
Mr. Chairman, to the councilman, I would suggest that what it means is that we would want to diligently discuss, if there's something to discuss, with another tenant in another sports facility, but that it may not be advisable to suggest that we needed to make a deal now for the sake of a few $100,000 in a year or another year.
Mr. Chairman, Mr. Aftermath, if this money goes into County Reserve B and it's not needed to pay the pay shortfalls in debt service, can it get back into the facility reserve somehow, or once it's transferred into County Reserve B, it's gone as far as the alternative facility is concerned?
Mr. Chairman of the Councilman, as the agreement stands now, it would always stay in County Reserve B.
Okay, and final question. It relates to your earlier statement that it's not for certain, but there's a good probability that the sin tax revenues would not be sufficient to pay the ordinary maintenance of the facilities over the 20-year life of the sin tax, and I'm wondering as to the prudence of committing resource streams and putting money into to new improvements if we don't know if we can pay for the basic maintenance. And my question is, if a significant shortfall occurred and we did go ahead with this deal now, how would you suggest, as our financial advisor, where we would look for revenue streams to make up the shortfall on basic maintenance?
Mr. Chairman, to the Councilman, that's a question that in my former role as Gateway Chairman, I've thought a lot about over the years. As it relates to this particular arrangement thanks, Joe, for committing revenue streams, my personal view is this, and then I'll get to your question as it relates to myself as the county's financial advisor. The revenue streams that we've identified here for this particular set of financing arrangements may not, I don't want to speak in any kind of absolutes, may not be available, may not have been made available to the county for ongoing capital repairs, as those capital repairs are described in the existing gateway leases. The statute as it relates to the 1.5% tax, I think at least it suggests that it's, or at least the spirit of what the statute says suggests it was made available by the General Assembly for new construction. The city, who I think sees, as I do, that this particular set of arrangements creates a better opportunity for maintaining the large amount of tax revenue that's available at the coming out of the arena currently by making these improvements. It may not have seen an extension of the admissions tax for the purposes of capital repairs as important as for new construction. But that's just my speculation. But you make a very good point about excise tax shortfalls, potential excise tax shortfalls, and capital repairs. Although I would, my view is is that this project would increase the likelihood of arena success between now and 2034. And arena success is translated directly into tax revenue. Just the admissions tax out of the arena in 2016 generated $13.5 million. Add that to parking tax, income tax, sales tax, et cetera, and it's $20 million or more from this single facility. I'll leave it to others to discuss policy, but I would agree that this project does enhance the likelihood that the arena would continue to be successful. Related specifically to other revenue streams, over the years, we've looked at a number of revenue streams for county-related civic projects, travel, visitor-related projects. Perhaps we could look at some more of those as the years go forward if the county needs to.
Thank you.
Now we go to Councilman Baker, then Jones, then Chuma, then back to Schron, and back to Conwell. Councilwoman.
Thank you. Thank you for being here today. We got right into the flow chart of how the money would be spent, but I think that it might be worthwhile to talk about how much money we're talking about that feeds the flow chart. So I think maybe we can, if it's appropriate time to ask, what kind of money are we looking at on the participation of the county that is going to be investing in order for that money to flow into the different categories that you just were talking about?
Mr. Chairman to the Councilwoman, looking at the specific silos, the three silos as we've identified them, the county money is, and I want to make sure I state this clearly. I think there's been some miscommunication, maybe sourced from me, that the county, that this amount that's coming from the subfund and the 0.25% sales tax, this is the hotel and convention center cash flows, is $16 million. That is $18 million. And that's not changed. At least it hasn't changed since our deliberations back and forth on the application of the 1.5% bed tax. The monies, since last spring, the monies in this left-hand silo have equaled roughly $62 million, $62.1 million. The 1.5% 1.5% bed tax is a schedule of payments that totals over the years through 2034, $44.1 million, and the county money, which is sourced by the 0.25%, would be sourced by the 0.25% subfund for the hotel and convention center, is roughly ranges from a high of $2 million, I believe, in 1 year. The rest of the years are either they're generally characterized at about $1.5 million a year. The bed tax schedule starts at 1. It escalates and ends up in 2034 at roughly $3.5 million. So that characterizes that. The debt service related to that particular silo, these would be tax-exempt bonds. Principal amount plus or minus $35 million. Annual or the interest paid semi-annually. The interest total is not quite that amount. I think the interest total is about 19 million, 19 under current market conditions. Interest over the years, 19.1 million, so a total debt service cost of 49.1 million. The annual amounts that would generally, the residual amounts that would fall into the county reserve are generally $300,000, $400,000, $500,000, except for the first 3 years where we've identified seed money for the cooperative reserve from those sources. Again, the trade being Cavaliers supporting the cooperative debt service with their contingent rent. If there was never any revenue from the middle silo, which we don't expect, but if there was never any revenue, then at least that bought the Cavs some time with regard to the payment structure. There's roughly 3.8 million of the schedule is $1,750,750 roughly. It's not exactly what it is in those first 3 years that provides seed money to the cooperative reserve. But beyond that, I mean, you're generally looking at a few $100,000 a year being made available to the cooperative reserve. The second silo, if the Cavs make the playoffs, or the other teams playing in the arena make the playoffs, there could be significant money that's there. And again, if these clubs make the playoffs, if there was not this transaction, that money would be used to pay debt service on the existing county gateway bonds. With this agreement, the money would be used for these bonds, and the county would use its general fund resources to pay the remainder of the current gateway bonds, as the county's done over the years. On average, the county's supported those bonds to the tune of $6 or $7 million per year. In 2016, the combination of the admissions tax and there's a bed tax agreement with Destination Cleveland, the debt service on those bonds was nearly fully covered in 2016. The sales tax increment is generally, we've got that ranging, again, minus the $250,000 base, which would always go to the general fund. The increment is estimated to range from first year of $650, but for the most part, it's a few $100,000. The extended admissions tax provided by the city starting in 2023, mid-2023. Again, the amount paid by the city to the county in 2016, roughly $7.3 million. The maximum debt service on the cooperative bonds is roughly $4.5 million in between the years 2022 or 3 and the final maturity at January 1, 2035. So the way we've at least structured this so far, we are anticipating residual revenues being deposited into the county reserve. We are expecting revenues to be deposited into the cooperative reserve and to be available for these respective sources. Under current market conditions, for the lease-related bonds, for lack of any better terminology there, the right-hand silo, the debt service, the annual debt service there, somewhere between $5.75 million and $6.25 million, depending on where interest rates go.
Okay, well, to maybe make this a little simpler,
I'll do my best.
the public-backed bonds that we're talking about, in order for us to have the taxable public-backed bonds, we're looking at about a 54.3 million debt service. And of that 54.3, 20 of that is interest. Is that fair to say?
Mr. Chairman and the Councilwoman, that is fair to say. That's pretty close.
So the other taxable bonds, or I'm sorry, the tax-exempt bonds, that was the taxable bond, the tax-exempt bonds, that's about almost a 50 million debt service. And of that, because they are tax-exempt, 15 million would be spent in interest. Is that fair to say?
A little bit more than that, about 19 million.
About 19. So that's where you get your $40 million of interest that we need to pay in order to borrow 70.
Mr. Chairman, to the Councilwoman, you would be, yes, you would be right about at $40 million in interest cost to provide the 70 million from the public sources.
So when we, if I may continue, if we are talking about an investment of 70 million for us and 70 million for the Cavs, we're really talking about 110 million, including the interest, and a 10.9 million, which is in the reserve fund. And if the interest rates were to go up, or if the sales weren't there, we're the first dollar in to make that up.
Mr. Chairman, to the Councilwoman, I would say that there's certainly no guarantees that that if interest rates rise, if the council were to approve this arrangement and interest rates were to rise between now and the time of the bond sale, that the total debt service would not be greater than 49.1 million. What would likely happen in that case is that the amounts available for the county reserve would likely be less than what is currently programmed.
That's the 10.9 we're talking about.
No, ma'am, I don't think so. I think the 10.9 you're probably talking about is the amount in the cooperative reserve.
Okay, yes, I am.
So again, no guarantees, but it would take a rather significant move in interest rates for there to not be enough money as the arrangement is currently structured to fund the tax-exempt bonds. Now, in the second silo, again, if there is insufficient funds in the county reserve, if there's that would be available for the cooperative debt service. If there are insufficient funds generated from the streams in the second silo, then the Cavaliers will be the first line. Would have to, under the flow of funds, would have to check the reserves. But if there's nothing in the reserves, then the Cavaliers would pick up the slack with contingent rent. They would, that would only be recovered if there was ever revenue in the reserve funds on a going forward basis.
Okay, so to quote an all-in, we're all in for 70. We're all in for another 40 in interest to borrow that 70. And we could, in the worst-case scenario, be in for another 10.9.
Mr. Chairman, to the councilwoman, you could potentially. However, the Cavaliers may also need to cover that 10.9.
I understand. All right, may I continue? The debt on the arena right now is how much?
Mr. Chairman, the councilwoman, roughly 55 million, I think, give or
55.
take, is left.
So the debt that we are talking about now incurring would be in addition to that debt?
Yes, ma'am.
The 70 million and the 70 million of the principal that's going into this arrangement, how much of that is direct into the actual construction, and how much of that is soft costs? Architectural fees, attorney fees, all the things that have nothing to do with the actual hard costs of construction.
Mr. Chairman of the councilwoman, I would leave it to the Cavaliers who have the most up-to-date information on the construction arrangements.
Is it fair to say that soft costs are in that number, though, in that 140?
Yes, ma'am.
Also, within that number, is there a contingency? I know that you would pay for, or has been stated that the Cavs would pay for, or the Q, for the overruns, but is there a contingency built into that 140 before overruns would be a consideration?
Mr. Chairman to the councilwoman, there is a contingency built into that of a few percentage points, but the but given the fact that the Cavaliers have agreed to cover cost overruns, we've not analyzed with the same rigor the construction arrangements that we did, say, on the convention center or the convention center hotel.
I think it would be prudent for us to know what construction percentage is included, especially if we're not responsible for the overruns. If it's a higher than usual, then we are paying perhaps for some overruns because the percentage is too high. So I think just to be prudent, we should know what percentage of contingency there is for any unexpected issues that come up during construction.
Mr. Chairman of the councilwoman, we will provide you with a line item budget for construction.
Also, if I may, earlier in your conversation, it was stated that none of the operating costs are paid for by the county, and that I'm trying to see here but I don't think that operating costs, to mention it as not being paid for by the county, is something that we would ever be engaged in. This is a private sector company that has a payroll that is responsible for that, and we don't have anything to do, or would we ever have anything to do, unless I'm wrong, on any operating costs, any costs that have to do with the upkeep of their business, and even as a tenant, even though it's a public building, any improvements that would enhance what it is that they would want to do, that would bring up more money to what it is that they're doing. I don't think that those are things typically that we would engage in with a private sector company trying to do the best they can in being profitable and successful. Yeah.
Mr. Chairman to the councilwoman, the current arrangements as they relate to Gateway at the arena and the baseball park. And this is also generally true as it relates to the city's arrangements with the Browns. In all three of these cases, the public has never paid our current leases, which are now very old, do not include the public funding any operating costs. All enhancements, which in our lease jargon, at least for the ballpark and the arena, are alterations. Those are, except for this, have all in the past been funded by the Cavaliers and the Indians. In fact, the Cavaliers have funded over the years $60 million or more of enhancements at the arena. I believe just since the time that the current ownership took over in the middle years of the last decade. However, I would say that there are many professional sports facilities around the nation where the public and tax monies do fund operating costs, including many arenas, multi-purpose arenas that compete with ours. That is the case in Columbus. It is the case in Indianapolis, and in many others. So that is, it is something that happens. It's, for better or for worse, happening more these days than it has in the past, but it does happen.
The, if I may, the facilities fund that we're talking about, that I believe, is it the number 30 million is what's targeted to eventually go into the 40, or is it? I'll let you
Our
answer
goal, Mr. Chairman and the Councilwoman, the goal of that fund was to create a stream of revenue that generated a present value amount of roughly $30 million.
And that 30 million, is there any interest that is associated with that to get to that 30 million?
Mr. Chairman and the Councilwoman, the answer to that question would be yes. You may have heard part of the conversation that's taken place already where it's possible. Now, of course, none of the money in that fund is guaranteed, but that it's possible that the fund could accumulate monies in the amount of over 40 million over the years. So the difference between the 43 million, I think, is in one of the illustrations, and 30 would represent interest.
For now, that's, I'm good.
Thank you, Councilwoman. Now we're going to hear from Councilman Jones and then Councilman Tumo.
Thank you, Mr. Chairman. Mr. Oftermatt, I want to talk about the community benefits and the inclusion goals that would be attached to this project. And you may be the one to answer all of those, or you might need to use a lifeline. But, but we want to get a full picture of what the goals are that are attached to this and that would be a direct benefit to the community.
Mr. Chairman of the Councilman, I'll start. Perhaps the representatives of the Cavaliers can serve as my lifeline. As you'll recall, I was the Gateway Board Chair at the time in 2013 when the Gateway Board endorsed the city's memorandum of community benefits. Basically, what Gateway did at the time, and I think you were even in attendance on the day that the board approved its resolution to this effect, but what Gateway did, in essence, was endorse the city's memorandum. So Gateway uses the city's community benefits policies. What we have, what Gateway has done, no longer we, which is okay with me. But what Gateway does currently is they report regularly to the Gateway Board. Those reports are available to the county council to the extent that they want to see them. I think your staff folks have obtained them at Gateway's meetings. What we focus on particularly is what the small staff at Gateway is able to focus on in our capital repair efforts, which are often fairly targeted and fairly narrow projects, but involve city residents, City of Cleveland residents, to be clear, minority, female, small business contractors. Gateway has also endeavored to do its best to help promote apprenticeship programs. That's hard for Gateway to do, but with our contractor partners and Gateway's tenants, we've been able to, Gateway has been able to successfully engineer that. This project, if the council were to approve it, functions off of an amended and restated Gateway lease. Gateway's community benefits program is to be embedded in the Cavaliers lease. It's currently a Gateway resolution and Gateway policy, both. But it would also be embedded, those provisions, in the Gateway lease. This construction project would all be done pursuant to the Gateway Community Benefits Agreement, which is essentially the city's community benefits agreement.
Why the city and not the counties?
Mr. Chairman and the councilman, for no other reason than at the time the Gateway Board approved its endorsement of the community benefits agreement, the city had one and the county did not yet have one.
Did not. Well, we have one now. And so it needs to be considered. In fact, let me go back to frame this as I ask my further questions. I remember when I took office and this entire council took office in 2011. There were individuals, many in this room, who had supported not just myself, others on this council. And it was in the first few months of being in office, the Medical Mart convention, the Medical Mart was already a project in the works. We did not start it, we just inherited it. And as we, the 11 of us, had to come to the old county admin building that is now the site of our new convention center hotel, as we came into that old county building, there were picketers, individuals who had supported us, minority contractors, stood there with signs because they did not feel they were getting their fair share in the Medical Mart Convention Center. And I had to cross that picket line. And it crystallized in my mind one of the many things that I had to do on this council, and the same for many on this council. As a result of that, we have worked over the years to make sure that there were community benefits and inclusion goals on not just this project, but on every project over the last 6 years and all the projects that are going to come in the future. I look at this $140 million, and we could be blowing up pink balloons with purple polka dots for $140 million. It could be the $50 million of demolition that we've done in the community. It could be millions in community policing, whatever it is. There is a flip side, and that flip side is what are the contracts, the apprenticeships, and the jobs that this money means. A community benefit could be as simple as a tree inside of a concrete jungle. But I think the most important thing to the community is, are you getting a piece of these dollars in terms of contracts, jobs, and apprenticeships? So the conversation we want to have, and over time, because we certainly will have other meetings, but to be able to see in concrete terms the percentages of again, minority participation. I don't know if you can speak to those right now at this moment, or maybe you could speak to the syntax, because that was another opportunity that you were at the forefront and you would know, where we did the same thing. Those dollars had to go, those dollars, they were community benefit agreements and goals on that project. Maybe share with us, so this council, those who are new and those in the room, can get a sense of what that meant to minority populations, low income, African American, Hispanic, female, things that, so I'll stop there and let you touch on some of those in a more specific way.
Mr. Chairman, to Councilman Jones, I can tell you that inclusion goals, going back to, because I was there and participated in it, going all the way back into the early 90s, was always an important component of the Gateway project. We tracked it carefully, reported it to elected officials. Later on, more recently at Gateway, and I am 100% certain that we can obtain from Gateway staff very detailed reports of minority, female, local, small business contractors that have been participating in not only syntax-related work, but the Indians renovation work that they've done over recent years, the other Cavaliers-related projects that they've funded themselves. So we can, Gateway can supply very detailed reports to you, to the entire council, so that you can see it. I will, as soon as we're done here, I will reach out to Gateway staff and make sure that they communicate either directly with the council or with council staff and provide that information to you, because it is, it's a lot of work to track that, but the Gateway staff does it because the Gateway staff knows how important it is. So we have that data, and Gateway is going to be committed to continuing along with the inclusionary goals that Gateway has, because they're going to be embedded in the Cavaliers lease and an integral part of this particular project.
Okay, I know that you have them, Tim. I've even seen them. The purpose of my question is to bring it out into the public domain. So although you don't have them with you, I would like you to bring them so that not only this council, but the community knows the work that's actually going on.
Mr. Chairman and the councilman, I will do that and make sure that you have them, because as I said, it does take a lot of work. It's something that tracking is something that Gateway's proud of, and it does it on a very detailed basis. So I will make sure that those are over to you within days, if not tomorrow.
And I'll say this, although we have made laws, legislation, and things to move this community forward in terms of using all the tax dollars that these residents have provided, that they get back into the hands of their residents and in a way that provides them with a livelihood. It's not just legislation, it's about impacting the individuals, the developers. And Dan Gilbert has certainly been one that I would say it's not always about legislation, but a good attitude is even better than legislation. And I think we've seen in the last few meetings, as we've discussed this, we have gone, just from my observation sitting here, we have gone from 6 years ago where we were picketed to minority contractors saying this project needs to happen. These are parts of the community that they're saying this project has benefited. So I see a change, as a result of the efforts of this county council and this county government in general, the executive's office. And so we definitely want to see those numbers.
Yes, sir.
Mr. Chairman, one final note. On the other side, this project, this is a county building. I was chairman of Public Works for the first 4 years of this office. And as it was my job not only to maintain road, oversee the maintenance of our county roads, but every building that this county owned. It's already been said many times in this room. But when we maintain the Jane Edna Hunter building or the Whitlatch building, or buildings that people have no idea what the name is, only recognize the names, we had to take care of them. This Q building is no different. We take care of this building. It just has a different emotional content to the community. But there are other facilities, and I'm sure the organizations could probably speak to it better than I can, but I think one that community might recognize is there are sports facilities down in Cincinnati. They have to maintain, but they don't have a major sports team. So their facilities aren't maintained at the levels that ours are, and we're all competing. We received the Republican convention as people were looking at the southern part of Ohio and the northern part of Ohio. One of the factors was our facility, our Q, was a better maintained facility because we had an anchor tenant that we were taking care of, and it made it a better facility for the Republican convention than a choice down in Columbia, in Cincinnati area, in that area. So again, this is our facility, but every dollar we spent, we certainly want to make sure the residents of this community get their fair share in terms of the work opportunities.
Thank you, Councilman. Next, Councilman Tuma.
Thank you, Mr. President. Just circling back to the conversation you had with Mr. Miller regarding the sports facility reserve and how those monies were used. I'm trying to balance the fact of you know, our council being progressive, thinking ahead long-term for potential use by the Cleveland Indians, I'll say it, the Cleveland Indians, for another facility upgrade, versus the prudent use of tax dollars. So what I'm trying to figure out is if, as you indicated, Mr. Miller, that those funds, if they're not used, you know, go back into debt service, I believe you said, is that correct? How would we ever really get our hands around creating a true fund for another sports facility? I'm trying to get at the thought process that whoever came up with that aspect of this agreement. Why even bring another sports team in this if there's not a more concrete understanding as to how we would proceed on something like that?
Mr. Chairman of the Councilman, the city of Cleveland found it very important to attempt to plan ahead, given the role that its admissions tax plays in these arrangements overall. They encouraged us to do our best to come up with a plan to allocate monies to a potential, to another potential project. And as I said, I mean, we, at least to my knowledge, there's been no conversations with anybody regarding that, but they encouraged us as part of this agreement to work that into the arrangements.
Okay. And just as a follow-up, I mean,
We thought it was a good idea too.
you think it's a good idea, then wouldn't it, I mean, I hate to sound like Jack Schron here for a second, but wouldn't it make sense to engage with the other franchise to see what their level of interest is, or whether they, I mean, of course, they're not going to turn down if you're thinking about us in the future, but what I don't want to have happen is to have another organization up here in 2 years saying, oh, we need this too, now where do we begin? I mean, wouldn't it make sense to have them either in or out of this agreement?
Mr. Chairman of the Councilman, I've worked on more of these kinds of projects than I care to recall over the years. And in almost every case, they take a considerable amount of time to arrange. I think if the county wants to reach out and there's another entity that wants to engage in those conversations, we would work hard to try and create an arrangement that made as much sense as possible in these kinds of arrangements, but that has not happened yet.
Okay. All right, I appreciate it. Thank you.
Thank you, Councilman Tuma. Now we're going to return to Councilman Conwell.
3 questions.
Yes, ma'am.
One being through the chair to Mr. Ostermatt, is the proposed deal, if the proposed deal passes, what will be the county's bonding capacity at that point? And how will it influence our county's rating?
Mr. Chairman and the Councilwoman, both good questions. The county's bonding capacity is determined by a couple of different things. Number one, legal capacity, and the other, which is far more important, as you might imagine, ability to pay. This particular transaction does nothing to impact negatively or positively the county's statutory, its legal debt capacity. The amount of county resources being applied to this particular transaction, now don't get me wrong, $1.5 million a year plus the few $1 million a year perhaps is a lot of money, but it does very little to impact the county's ability to pay given for new debt, given the county's contribution from its resources to the project.
I was looking outside further than just, we need our bonding capacity for other projects that are needed in the county. So it goes beyond just the Q Arena. What we
Yes,
have, what
yes,
we
ma'am.
have to look at.
That's what I'm talking about. I mean, we've the general fund itself is not impacted by these arrangements, except in the cases where there are arena playoffs and the incremental sales tax. Again, the incremental sales tax, just a few $100,000 a year, perhaps. Be nice if it was more, because that would mean that the arena was very successful. But general fund programs are not materially impacted by these arrangements at all.
And what about the rating?
Bond rating. The county's bond rating is very strong, as you're probably aware. The county is a high AA rated general obligation rating. Its Standard & Poor's rating for its sales tax revenue bonds, which we're suggesting would be the security behind these bonds, Standard & Poor's rates those as AAA. Never any guarantees, but from where I sit, I think it's not likely that the county would experience a rating downgrade here. The county's fund balances are still strong. The county's budgetary approach, which over many years has been tightly managed, is thought of very highly by the rating agencies. You may recall that in 2013 or 14, I don't remember exactly, Standard & Poor's downgraded the county's general obligation rating from AA plus to AA, I believe. The primary reason that was cited, now Standard & Poor's changed their rating methodology. There wasn't anything specific that the county was doing at the time to generate that change in rating category. Standard & Poor's changed their rating methodology. And what the county stopped doing with the change in methodology was scoring highly. As a matter of fact, it started to score poorly related to population loss. Again, not that this project is the be-all and end-all of these kinds of arrangements, but projects like this, part of the intention from a public policy perspective is to broaden the base for population growth. Amenities like this are used by local companies as attractions for new employment. The hope being, as we've seen with downtown population at least in recent years, is that a long-term healthy arena would provide the menu of choices that would make young people want to stay here or people want to move here. So from the standpoint of trying to reverse population loss, I believe the rating agencies may view this project positively.
All right, second question. If the seats are being reduced, where will the proposed increases in emissions come from? Because there was some talk last meeting that the seats were actually going down.
Yes, ma'am. Mr. Chairman and the Councilwoman, the reduction in seating capacity at the arena is relatively small. I believe less than 1,000. The expectation for strong revenues going forward would be from price stability or price growth and long-term maintenance of capacity utilization of the arena. I mean, more and more people would want to attend events at the arena because of the improvements, but also because hopefully the products being offered in the arena are pretty good too.
When entering into the new glass structure, and I haven't looked at any renderings, will there be a charge to watch the Cavs in the new structure, or will it be a VIP section only?
Mr. Chairman and the Councilwoman, these would be questions more appropriately directed at the Cavaliers, but my understanding of the project is that generally this particular project is meant to increase public access spaces. The way the professional sports facility trends are going these days is that there are fewer exclusive spaces, fewer VIP spaces, and more spaces for public gathering.
Okay. And final follow-up for me today would be, the council was presented recently Cavaliers Quicken Loans Arena all team members by county zip code. I guess it is to show us the zip codes and the total number of residents that are working at the Q and under a full-time and a part-time capacity. And I wanted to know, are these prevailing wage jobs?
Mr. Chairman and the Councilwoman, I would have to direct that to the Cavaliers because that is not an answer that I know. if you'd like to do that now.
Would you like to do that now? Okay, we will. And just to give us some direction here, our regular council meeting will start in about an hour and 5 minutes. Mr. Jones has indicated he had a couple of follow-up questions. But what I'd like to do is make sure that we open up soon questions to broader issues that councilmen have that have not been part of the, I think, important and very narrowly focused questions that have been asked. I'm very pleased with not only the questions but the responses and the level of information that we're gathering. But I want to have an opportunity for a more open discussion by members who may have things on their minds that aren't related to these specific questions in this line of questioning. So first, we'll try to answer Councilman Conwell's question, and then if Councilman Jones wants to ask some questions, and then we're going to open it up for broader questions, and people will start to indicate to me. Yes, Councilman, is there a question?
I have one specific follow-up question on this that I'd like to ask if I could.
Okay, all right. Very good. You want to do that now, or do you want, okay, all right. All right, thank you.
No, I'll retreat back here and then come back up if that pleases the chair.
That's fine.
Okay.
That's fine.
Thank you, Mr. Chairman, to the councilwoman. Thanks for having me back here today. Specific to that question, if I understand correctly, so we have, what you have in front of you is our team members who work at the queue on a day-to-day basis, and their numbers in the specific different zip codes. So we'll have full-time team members and we have part-time team members as well. Our part-time team members on average make a wage of $14.71 currently.
Okay, and that's just for the residents to know, that's 931 total. And then for the full-time, that's 352 total residents. So what are their salaries? What is that? They're all just 1471, that's the minimum? Is that
No,
what you're
that's an average of our part-time team members, and full-time team members are compensated on different bases.
saying? Okay. Councilman Miller, you had a follow-up to my question, that question?
Hold on.
Gotcha. Thank you.
Okay, thanks, Lynn. Who is your question for?
Actually, for both.
Okay.
This might
That'll
actually
give-
be, we're both,
Mr. Offerman, you don't get much rest there.
right. Again, my question is still in the vein of the inclusion goals. As we discuss and set the framework for the goals, contracts, jobs, and apprenticeships, when it comes time for apprenticeship conversations and those, there will be a project labor agreement. Do you have a rough timeline as to when that would be, and who might the players be at that project labor agreement?
If I can answer there through the chairman to the councilman, the Gateway, as I understand it, with the Gateway CBA is more comprehensive than a project labor agreement.
Okay.
So we'll have goals within there as well as working with the union labor, in addition to specific goals through the Gateway agreement for MBE, WBE, SBE. In addition to the fact that Gateway has an apprenticeship program as well, which we would look to embrace and follow and build on.
Okay. So I know you have a dream timeline of between 2017 to 2019 and the potential all-star game, those things. Within that time frame, do you have a sense of when that PLA might take place?
Through the chairman to the councilman, in terms of that, again, that overall comprehensive CBA, that would be something that's in existence now. We would follow in accordance with that, and can work, work within work through Gateway as our partner in the whole process. So we're under the realm of Gateway as we go through the project, and we'll follow all the guidelines outlined. We'll follow the guidelines as part of that CBA.
Okay, thank you.
Mr. Chairman, to the councilman, in every one of Gateway's projects, Gateway uses the umbrella inclusion agreement that is basically run off of the city's community benefits memo. And every project that Gateway does is run under that umbrella.
Okay. Again, and that's where we can continue to have that conversation around
Yes, sir.
what the county has brought to the table.
Yes, sir.
Now, Councilman Miller, if you would yield for a second, Councilman Harrison has indicated
Just-
he has some
Just really quick.
follow-up to Councilman Jones.
Yes,
also
Mr.
Mr.
Chairman,
Tuma
to
has
the
indicated
gentlemen who
that
are up front. It's really
well.
not a question, it's just a statement. I remember in our opening Tuesday meeting when we started this dialogue, the county executive made his opening statement, had a speech about what has happened, what the county has been doing. But he also, I believe, if I recall correctly, talked about this project will adopt the minority inclusion program that the county had put together when moving forward. So I would ask staff or others to look at that. Is that true? If we will, in addition to the city of Cleveland's Fannie Lewis law, whatever we're calling it, serve as the umbrella. But if I recall correctly, that the comment was made that that this project will adopt the minority inclusion efforts in the program that the county has come up with.
Is there someone who, do you want to answer that question, or do we need someone from the administration to clarify that?
I'll give it a try, Mr.
Okay,
Chairman.
give it a try. I remember it as well.
Yeah, I will double check. I don't recall how the county's inclusion community benefits program agrees, or where it perhaps doesn't agree with the city's. But Gateway adopted the city's, and that's what Gateway has been using. As we've talked previously, I mean, Gateway's got two major stakeholders. One is the city of Cleveland, and the other is Cuyahoga County, to the extent that Gateway needs to better adapt to both of these arrangements. I have no doubt, even though I have no more authority at Gateway, but I do know them well enough to know that there is no doubt that Gateway would work to do that.
Thank you.
We'll definitely find out, but I don't think there's very much daylight between the city and the county on these issues.
Mr.
Right,
President,
and I'm just-
if I might, I'm sorry, Mr. President, if I might,
Triage.
you're correct. The county's community benefits agreement mirrors the city's, so the same goals that apply when the city agreement has been incorporated into the county's goals. I could share with you, Councilman, a copy of that agreement.
Okay, thank
And
you.
if I might just add, and they certainly mirror, but they're ours. And there's no way we can
We
make
have
the
ownership.
loan, make all the loans 100%, collect rent from the city, the county, and the Cavaliers, and to think that our goals should not be at the table in this room.
We are on par with
So
the
I
city.
don't doubt.
Councilman Miller and then Councilman Tuma, in no particular order.
Mr. Chairman, Mr. Oftermatt, my question is if we get to the end of the time period of this arrangement and there was not an agreement about an alternative facility and not all of the money in the county reserve A or B was needed for paying the cooperative bonds, where would that remaining money in the county reserve revert to, and at what time, and what could it be used for?
Mr. Chairman, to the councilman, the expectation would be that there would be monitoring of the debt service and the amount of money in the reserves, and an expectation if the group at the time would be able to look 2-3 years into the future, that the monies in the County Reserve B, which would never include admissions tax, by the way, if I didn't make that clear previously. But monies in County Reserve B would be used to pay debt service. It could be used, as I think I mentioned previously, it could be used to reimburse the Cavaliers for prior payments of of its contingent rent, which basically is debt service. So it's always to be used to pay debt service.
So the bond could be paid off early.
The bonds could be paid off early, yes, sir.
Okay, and Mr. President, just one thing I just want to state for the record that I do not believe the general fund impact is immaterial, and that at some point I still want to ask the Director of Budget and Management for some detailed questions.
Absolutely.
about that.
If we can finish up this line of questioning, we can get to some of those issues, and if not,
That's all.
we're not going anywhere. Councilman Tuma, and then Councilwoman Simon, and then I would really like to open it up to some other questions.
Okay, thank you. And this is probably better directed to the Cavaliers. If you could, again, for those people out there who still insist or are concerned, you're giving millions of dollars, quote, to a billionaire. If you would just enlighten or re-enlighten us to the realities of the market size that Cleveland is in versus some of these other NBA teams and franchises, as far as the cost to the public and that sort of thing, including, I think you mentioned at one point, TV revenues and how that affects being able to pay for some of these facilities by ownership and such. If you could, that's my first part. And then the second part is more from a practical standpoint. Again, if you could just, the plans for the refurbishing or reconstruction, you intend to continue with shows and games and such. Again, how you practically, the practical matter of carrying out the reconstruction during the seasons.
Mr. Chairman, through to the councilman, first of all, relative to our market size, we're the Cleveland, Akron, Canton television market, which is the measure by which, when you look at any franchise or market, is applicably used. We're the 19th largest market within the NBA. We're the 20th largest market in the NBA by virtue of the fact there's two teams in LA and New York, and then also a team in Toronto, which is not in the US, but if it were, it'd be the 5th or 6th largest market in the US. So we're what would be considered a mid to small size market within our league as a whole. As you look at specific markets throughout the league, one of the major variables that exist are local media contracts, and a lot of that often is dictated by market size. So market like a New York, Chicago, LA, as an example, being a much larger market would be much different than, say, New Orleans, as an example. And there's a continuum that you may see as a result there. Contextually, I think further to your question is, so as you look at, and have stated this previously, so as you look at mid to small markets in our league, or frankly in sports, but in our league specifically as we're talking here, and you're looking at public-private partnerships that exist, the investment our ownership is making privately into the venue in that context is more than the other comparable markets. As you look at that continuum, you will see it approach upwards of 100% or even in excess of 100%. When I say excess, it'd be all the facility costs, but also, as Mr. Oftermatt indicated, in certain cases, operational subsidies relative to operations of the facility, or whether it be some varying percentages like 85%, 90, or thereabouts. And that basically applies not only to our existing lease, but also to the project at hand, as we're talking from a construction, whether that be a major renovation in this case, or a overall new facility. And with that, I would say, the other components of it that are unique, or not typically seen in these other comparable settings are one that currently exists, which is between ourselves and the unions paying our landlord's cost, which are upwards of $4 million a year. In addition to that, in this case, covering the cost overruns. Within the agreement, the term sheet itself, there's a commitment to absolutely spend $140 million on the project. So it's not something that we can spend less, as it relates to the project itself, but that $140 million, but then taking on the full extent of 100% of the construction cost overruns there. And then I guess the other, what's even much more unique aspect of it is in the event, in this case specifically as it relates to the admissions tax with the cooperative bonds, if there were a shortfall based on and I can't even begin to go to the depth that Mr. Oftermatt does with it, but if there were those shortfalls to actually stand behind that, where typically in other markets, that's the general fund of that community, that prospective governmental body that would be doing that as well. As it pertains to the process for build out here, our objective would be is to immediately begin on all of our pre-construction efforts so that immediately following the playoffs, we could begin construction, looking at a 2-year timeline to do so, with an objective, as our league has declared, as part of this, that upon completion of this project, and we'd hope to be done by, the first part of 2019, that they would agree to bring a NBA All-Star weekend here to Cleveland. Currently, 2020 isn't committed. Our league's not prepared to commit absolutely because we have no ability to actually evidence to them that we've started a construction, obviously, and beginning with that process. But our hopes would be is in consistent with their statement that in being able to do so, that the strong potential, hopefully, of 2020 All-Star game would be at the back end of that. Our plans is a pardon our dust type process where we would continue to function as an arena, which hopefully would be helpful for the community because the resultant tax benefits of all the events and the impact it has on the greater Gateway District and downtown as a whole would continue. But we would work through from overall construction end where we would be able to, whether it be certain exits we would predominantly focus on over another, or through that basis be able to have construction take place and still operate the venue rather than be in a situation where we're materially shutting it down over an extended period of time. Obviously, the objective right now is we have a lighter event load that takes place over the summer. So if you look at peak times for arenas around the country, it's really, we're in the midst of a peak period right now. But as the weather turns warmer and summertime, you have a lesser event load. So it offers opportunities for greater construction capabilities during that time, just because you have lesser interference, if you want to say, from a day-to-day event.
Okay, just one follow-up question, I'll be done. How many events were at the Q this past year, or intend to be in a annual year, one year?
It's approximately a little over 200.
200.
And you have a variable, obviously, with playoffs, and we hope to keep that healthy.
That's right.
In the mix, but yes.
Okay, thank you.
Thank you. And it seems like we have already segued into broader questions, and that's fine. But I believe, Councilman Simon, did you have a further question? And now Councilwoman Brown, and are we into broader questions now? Are we? Okay, well, we've got a list started on broader, so I'll do my best here. Councilwoman Simon, and then Councilman Schron, and then Councilman Brown. So far on, excuse me, oh, sure, of course.
So proceed, Council President.
Yes.
Thank you. So what I've seen in terms of the design is a glossy little pamphlet that looks really nice, talking about broad range of spaces, new dining and bar areas to fan zones to activate neighborhoods. Is there actually a design in place that's already been totally fleshed out?
We have, we're about 75% through construction documents. So from a design end, we're working through relative to an overall design and then working our way through to construction documents.
So my concern,
Yeah, I'm
as
sorry.
I sit here,
Seriously. Yeah.
would be that this design, that council, if this were to proceed, would have an opportunity to have input into that, and this is a county publicly owned gateway building. I want to make sure that any design would not close the queue off from the public streets, from the bars, from the restaurants. I don't know if this is going to expand the opportunity for people to use our bars, or if it's going to create indoor dining that would have a less of an impact on the neighborhood. Can you talk about that?
Yes, to the chairman through to the councilwoman, our objective is to make it actually much more functional and integrated and actually breed, if you want to say, an overall experience that is much more befitting of what's taking place in the Gateway District as a whole right now. So right now we have a facility where its challenges are, and it's, if we were again to look at what has been taking place on a national scale and these new generations of facilities in general, not to mention just with arenas, but as it relates to ingress, egress, flow of event, whether it be related to your circulation space around the event itself, whether it be gathering zones within the building itself, all of those areas which are now inherent weaknesses in the design and structure of this building, would effectively be able to become more strengths with the building and also further integrate it not only to the Gateway neighborhood, take a space or a facade right now and adding that space and pulling it closer into the Gateway neighborhood, closer to Huron Street, as it were, would actually even open up the building and even create greater connectivity with a neighborhood where it's effectively a fairly much a closed structure right now. What I mean closed structure is, by and large, unless you saw people coming in and out of the queue for an event, you wouldn't really know if there's an event going on. Because you're effectively behind walls or walls that aren't open in terms of actually view into the building. So in this case, that connectivity would be enhanced through the very structural enhancements that would also improve the overall operational flow and capacity of the building as a whole.
Hope so. And Council President, I would like to see the design and make sure that this is going to be an open experience. You're saying it is, but I think we should have an opportunity to see more specifically what's happened. Oh, he's gone. So.
No.
You. Okay, so just for the record, are you going to expand restaurants inside, new restaurants, or just the space for the existing restaurant?
We'll, to the vice chairman, to the councilwoman, we would look to update spaces throughout the building, update, different, so as it relates to whether it be food and beverage offerings or things of that nature, we would look to, update those to be more reflective for the building going forward. As it relates to, so as an example, we'll have different destinations or neighborhoods throughout there, and just as opposed to just having space, that could also be, part of a food and beverage engagement as part of that. If you think about it that way. So if you're walking around the queue and there was a larger space where I could gather now, so probably the best analogy I would give, if you have a frame of reference, is like the B spot. And the B spot is over by the team shop right now, where there's actually a place where I can engage, enjoy the event, and sit down. And if I'm with my family or friends or whatever, I can actually sit down and engage in the event. That's frankly the only spot on the main concourse where that opportunity exists. So we would look to create more of those type of opportunities or destinations or neighborhoods throughout the queue.
Okay, well, Council President, what I was asking is to have a look at the design to make sure that we maximize access to the neighborhoods outside of the queue and not cannibalize having more expanded restaurants inside, so people are more reluctant to go out and use the bars and restaurants. That would be something I want to make sure that's going to be expanded before I even consider voting on this.
Councilman Schron.
Thank you. I think we've moved into general questions for Mr. Opperman. So At the last meeting, and these are not Mr. Komorowski's questions, these are, I think, for your area, I had some confusion as to people's roles. And I'd love to better understand your role, because you were chairman of the Gateway District. And your role and responsibility, it was what?
My role and responsibility while I was chairman of Gateway was to preside over Gateway's board meetings, which include county appointees and city appointees. As the chair, I was a joint appointee of each of the city and the county.
Paid or unpaid?
Unpaid.
Okay. I just want to make sure we got, yeah, that's, yep.
I resigned from that position because I was taking on the role as county financial advisor.
Paid or unpaid?
Oh, I'm getting paid as the county financial advisor.
Okay. And when was that effective relationship to your chairmanship?
My contract with the county was signed, I believe, August 4th. And the contract had me resigning from my position. Wanted to try and create a transitional period so that the county and the city could find a new chairman, which, as far as I know, has not happened yet. But the contract identified my end date as the chair at December 31st, unless there was a chair found prior to that.
And I'm not trying to gotcha, but as of this morning, you're still shown as the chair of the Gateway District on the website.
On the Gateway website?
Yeah. So it's not, I mean,
is-
other than, it's probably an administrative thing, just, I'm just trying to
We'll
go
get
through
that-
and,
We'll get that changed. Is the year on the Gateway website after the year 2000?
I don't know. Yeah, it says, it's dated
Sorry, Gateway.
2/28/17 on the bottom of the printout, so I just punched up. When you looked at the county financial condition, because you're giving us advice as the county advisor, I assume you looked at the totality of our county financial condition, not just this little strip as to how this fits into our package?
Mr. Chairman, to the councilman, yes, that is the case.
That fits into Mr. Miller's questions about the finances and the budget and where we're going to go, and he's getting ready to go into county budgeting process here pretty soon. So you looked and forecasted that in this model that you created as far as what you brought forth to this council right now?
Mr. Chairman, to the councilman, yes, that is the case.
And how have you factored in what effect, if any, the state budget's going to have in 90 days roughly on the county budget?
Well, primarily what we are looking at with regard to the state budget is the change in Medicaid, and not only the Medicaid managed care portion of the sales tax, which is a large negative impact on the county budget, but also the fact that reduced Medicaid may require additional health and human services needs. As the council knows, not all health and human services needs are funded with levy funds. Sometimes they are funded with the general fund. So it is, we are taking into account, not only as we prepare for the possibility of this bond issue, but also in ongoing conversations with the bond rating agencies and the prospect for other more traditional county infrastructure, the likelihood that the general fund will have a negative impact.
Just like somebody had asked about construction documents and construction costs, you offered this so we can see the construction costs. We got an idea to see the construction documents. And now I'm asking, I'd love to see the work papers for how much we have factored, because what's the range of that you're factoring in for the Medicaid expansion as its impact potentially from the state? Give me the high, give me your low that you've got in your work papers when we look at it.
Mr. Chairman of the councilman, with regard to the Medicaid managed care loss for sales taxes, roughly $25 million. I don't know whether that's exactly what the county is using, but that would be a $25 million annual impact for loss of sales tax revenue.
And that is not factored into the Health and Human Service levy number that we're talking about. Potential could be coming from as much as the general fund. Is that correct?
That would be a general fund impact because
Right.
it is general sales and use tax.
Exactly. So I want to make sure there's complete clarity as to why waiting till June 30th, when we actually know what the impact would be from the state, is something that we don't have factored in because we don't know the impact at this point. And then your models can't factor it in because we don't know what it is at this moment. Is that a correct assumption?
Well, Mr. Chairman of the Council.
Other than a range.
We're factoring $25 million reduction in general fund revenue.
Without knowing what the exact dollar is going to come from the state at this point in time.
That's correct.
And we won't know that till June 30th by law. They have to provide that to us.
That's correct.
Okay. When you advised on this deal, you were still probably, at least based on your numbers or your dates, you were still the chairman of Gateway, on paper at least till December 31st.
That is correct.
Conflict?
No. I have been a county appointee to the Gateway Board. There is certainly a fiduciary responsibility for any board member on the Gateway Board to the Gateway Board. There's also a fiduciary obligation, at least as I saw it, to each of the city and the county, which is what caused me when we agreed with the county on the contract that I would resign from Gateway as soon as practicable. Since early 2015, I've been working on this project for Gateway, but I've worked on, as you know, I've worked on many county projects over the years.
And please don't misinterpret. For the 6 years I've had the opportunity to hear you speak, I've always respected your point of view, your thoughts, and give you good counsel. It looks like two different fiduciary responsibilities or two different hats are being worn there. During the time, were you engaged with negotiations with Mr. Nance at all on what he was looking for on behalf of the county, or how it was going to get structured, to how the deal was going to get flowed?
In terms of lease negotiations? Yes, I was.
Okay. In there, I think you indicated a few minutes ago that there was a small number of percentage points potentially in the construction documents and the construction design itself that had contingent fees potentially in there. I thought the word is small percentage.
Mr. Chairman,
Whatever it is, just tell me what the correct.
Not contingency with regard to fees, but contingency with regard to construction costs.
I'm sorry, yeah, it's not contingent fee, it's contingent construction costs that will result in hopefully some savings. Just because I know you were engaged in that same exact conversation when we had it around the casino, or the convention center, that contingent percentage, I believe, exceeded $30 million when we saved it. Is that roughly where we were?
That is correct.
And I believe that what we're talking about is using that same energy that we used when we did design build on the hotel. And how much is that number, where the contingent savings that we're looking at going to generate as a result of the hotel savings?
Mr. Chairman, to the councilman, that's a project that we're working on currently. However, we're estimating that the number after completion of the tunnel under Lakeside is somewhere in the range of between $15 and $20 million.
And that money is being earmarked for this project also, is it not?
Mr. Chairman, to the councilman, there are resources in the 0.25% sales tax subfund, as the county has designated it, which is basically the sources and uses for the hotel and the convention center. That would include the remaining monies left over after construction of the hotel and the tunnel, but also annual net sources over uses to the tune of probably $5 to $7 million per year.
But just this potential savings from doing the same thing we did with the hotel, the same thing we did on the convention center, and there's potentially a savings that could be generated if we're engaged, as somebody was talking about the construction documents and the flow, that we could see that same savings coming through this queue expansion.
Mr. Chairman of the Councilman, I would suggest that it would be unlikely that there would be construction savings here. Our agreement with the Cavaliers that we're presenting to you suggests that the Cavaliers, since the Cavaliers are standing behind the construction, it was important to the county to force the design and have the Cavaliers build everything that they've said they were going to build, so that it adds maximum value to the project. So it would be unlikely that there would be any net from construction. To the extent that there is net from these annual cash flows, they could, as I believe Councilman Miller suggested earlier, pay the debt off early.
And one of the big differences, it seems to me, is design build was used in the convention center, saved money. Design build was used in the hotel, and we heard from the construction manager on this project that they're using some other technique other than what are currently being used in every other aggressive technique where dollars are being saved.
Mr. Chairman, to the councilman, the county was the one on the hook for the convention center itself and the Global Center and the hotel. So as I mentioned earlier, we used lots of rigor as we were planning for those projects because the county was on the hook for any cost overruns. In this case, the Cavaliers are on the hook for cost overruns. So we believe they'll make good on their promise to pay as is set forth in the Cavaliers lease, any cost overruns in this case.
My only comment would be that it looks like some of those reserves, we're going to be on the hook if we expend them, if they're not there in 2031. And as we know, they can be tapped into if there's drawdowns and callbacks on there. So, and then my last series of questions, you, on the bottom of the Gateway logo, it has the Indians and the Cavs, and in the center, clear in the center, it's got the Destination Cleveland in there as an integral partner in this whole project, in the Gateway project. And one of the things that just seems to bother me is that everybody tells us about how strong it is, and I know that Mr. Komorowski is on the Gateway board, or is on the Destination Cleveland board, taking a leave of absence, but we're taking the bulk of at least the funds from the county coming from that, those funds coming from Destination Cleveland be rerouted under this financial model. Is that correct?
Mr. Chairman, to the councilman, first of all, I'm not aware of what paper you're referring to that has Destination Cleveland's logo on
Well,
it.
it's on the website. So it's on Gateway's logo. When you go to up and you bring it up, I would just not as a big deal. It just says that that it's an important part. My only background going from that is because you're probably very familiar, having been on and chairman. But if they are driving so much activity here, and everybody is acknowledging that, rather than take it out of their operating, of their funds that would go into construction and building and projects of that nature, wouldn't a better alternative be to use some other form of taxing, perhaps like a bed tax in that respect? Did you financially model it with bed tax by chance instead of using this technique?
With a new additional bed tax?
Yes, yeah.
No, we did not. the 40-year extension of the 1.5% bed tax is specifically identified for travel and tourism related capital improvement projects in Cleveland, in Cuyahoga County. We felt as we were originally designing this that there was no more impactful travel and tourism related project than this. The taxes are set forth by statute and by agreement to be used for capital improvements only, not for Destination Cleveland's operating costs. So it seemed like a good fit.
But Destination Cleveland has responsibility for the overall responsibility of the hotels, the convention center, all of the other entertainment venues as being a way of being supportive of all those, not just the queue. Is it not part of their obligation?
It is part of their obligation, yes.
And I've gone to conventions all over the world, and I've never, ever asked what my bed tax is before I check in. On the way out the door, perhaps, but I have yet to find that where that's a deterrent for anybody going to a convention or a trade show. Why not, rather than take it out of one guy's pocket, why not charge it to the 85 or 90% of the people who are coming here as tourists and to make up this difference? Would your financial model make any difference if it came from an additional 0.25% bed tax or a 0.5% bed tax?
Mr. Chairman, to the councilman, it would require a new tax. The combination, what we've been told in the past by representatives of Destination Cleveland is their view has been that the combined sum of the bed tax and the sales tax in the county pits Cuyahoga County as one of the highest, if not the highest in the state, and very high compared to its peer group in the region, Pittsburgh, Indianapolis, Louisville, Memphis, et cetera, Kansas City, St. Louis. So we were reluctant to identify a new tax.
Who's we?
We, as we were originally modeling this financially, and that would have been actually before Mr. Nance was even involved, but this goes back into 2015 in discussions with the county. And my instructions were
From who?
from the executive,
Okay.
were to not increase any taxes.
So in your history of being involved with all over the country, is a bed tax a decision by anybody when they come to a city as to whether they come?
Well, Mr. Chairman, to the councilman, like you, I travel a lot in my job, and I never check to see what my bed taxes are. They are what they are. But I will say we have been told many times, as you're probably aware, the county and the Convention and Visitors Bureau in their various incarnations here in town, Positively Cleveland, Destination Cleveland, but the Convention and Visitors Bureau have been partners in a number of financing arrangements related to Gateway and the Convention Center, and have had many conversations with them. And in most of those conversations, there's been a tension related to the extent of the tax rate that is levied here in combination with the sales tax rate.
Okay. I just couldn't help but notice when I look at Utah Jazz is going to finish their expansion with their glass atrium. It looks like it's coming 75% from ownership and 25% from the taxpayers. I know that they own their building, but they don't own their dirt. Their dirt is owned by the community. And so I just can't help but think that when we keep saying that the majority are not. This is one that's going to be finished up, I believe, this fall, and it's 75% paid by the owners, and any place I've ever rented, leasehold improvements are paid by the tenant. It's part of typical landlord-tenant arrangements.
Mr. Chairman, through to the councilman, but you actually noted, so the Utah Jazz physically own the building. They have flexibility as it relates to that with ownership in terms of having a private facility and everything that inures to benefit of owning that facility. So again, my reference is with public-private partnerships as it relates to publicly owned buildings throughout, which is predominantly what you will see in mid to small markets.
Thank you.
Thank you. Councilwoman Brown?
Thank you, Mr. Chair. A few council members have already spoke about the construction being, and I think you said 75% in process from renderings to construction. So my question basically is there going to be a bidding process? Will it be an RFP or an RFQ?
And Mr. Chairman, through to the councilwoman, we will go through a process in the market through Gateway, work through the Gateway process. So as it relates to, as we go to market, for materials or things of that nature, we'll go through the Gateway process for that. So which would include, bidding for the various different elements.
Okay, and with that said, so going through the Gateway process, does that mean they ultimately will decide who gets the contracts? Because again, we've been talking about meeting some, the CBA agreements, the community benefits agreements component. So who has onus over that? Is that the Cavs? Is it Gateway? Will it be us?
Mr. Chairman, through to the councilwoman, we would serve as the construction manager for the project with the responsibilities associated with that, working through with Gateway. And so we would be beholden to the collective community benefits agreement with Gateway associated with that, with all the goals associated with that. So all of those decisions would be made under that guise and those guidelines.
So given those guidelines, this might not necessarily be a low bid job?
Mr. Chairman, through to the councilwoman, we'll look to competitively bid that. At some point, you may have a certain component of the project where there's a specialty item that one group may produce better than another, or at a certain differential than another. So, I think ultimately that can factor in, but at the end of the day, we're going to work to try to be as competitive as we can and maximize the investment into the building and the impact of the building.
Okay, and then I guess the last question I would have with regards to that, you said you will be ultimately the construction manager. So will it be CM at risk or a design build, as Jack Schron indicated?
Mr. Chairman, through to the councilwoman, so we will be the construction manager. We will be ultimately at risk for cost overruns for those construction costs.
Okay, thank you.
Thank you, Councilwoman. Back to Councilwoman Baker.
Thank you. And given we are less than 20 minutes, I can't leave here today without at least asking, maybe philosophically or big picture. It reminds me of my other days on city council where abatements began pitting city against city and allowing property taxes to be diminished because we are fighting over structures and improvements and economic development. This reminds me of that we are now fighting over county funds, and that the county is going to give the public-backed bonds, not only for ourselves, but we're also allowing the for-profit entity to take advantage of those bonds. Having said that, and understanding that we're not using these bonds today for a homeless shelter or police stations or a justice center, we are using it for a very strong, very capable sports team to probably be able to finance this themselves, especially given that it is a tenant upgrade. But having said that, and understanding the value of having the sports team here, and understanding that we do need to be partners and that they give a lot to this community, I guess I'm asking that back when you were talking about the modeling financial choices, was there ever any conversation that perhaps it isn't a viable option for us to allow these publicly backed bonds to be for both entities, us and the person and the entity that's proposing this tenant upgrade? And could there possibly be, although maybe we'd be a trendsetter, to say that it would be better for the private business to fund themselves and for the county perhaps to find a way to fund their share, and that maybe a better interest payment or a diminished interest on the 70 million, which we said earlier, our 70 million is costing us 110 million. That's only to borrow the money. That's taxpayer money. Was that conversation ever there as our county's financial advisor? Did we ever talk about that scenario?
Mr. Chairman, to the Councilwoman, we did talk about that scenario. We talked about it internally among the county team at length. And it was determined that because of the impact of the arena and previous experiences with professional sports teams in town, primarily the mid-90s Browns, that, and given the fact that the arena has some age, it's now older or as old as the average lifespan of arenas, that it was prudent to try and move forward the best way we could to get to a 50-50 arrangement, or as close to a 50-50 arrangement as we could, on a net proceeds basis for producing net proceeds from the financing arrangements. It's 70 million and 70 million. Clearly, there are other ways to look at it. Right. On a debt service basis, 52% public, 48% private. On a comparative basis, still very competitive, highly competitive as these sports facilities arrangements go. So we endeavored through the rigors of negotiating to come up with as close to that goal as we could via the executive's leadership. And this is our end product.
May I follow?
Please do.
For what it's worth. So our hands for the most part are tied, that if we are to be competitive, given what other cities have now probably felt their hands were tied, we need to be in a negotiation position where we need to give more than perhaps what we'd like to give or what we think should be given in order to keep a team here and one that we all love and value, and certainly there are no better fans than the Cleveland fans. We certainly give back in many ways that aren't even monetary. I guess I'm disappointed in a way that we could not have negotiated a true public-private, with us being public and they being private, and they finding their own financing and us finding ours, and perhaps even given somewhat of a break on the interest that we're paying, the $40 million that we're paying in order to borrow that 70, given that we are not dealing with another big business. We are a county, we have a lot of services, we have people that we're trying to help, whether it's drug addiction or homelessness or even through our justice center's needs. There's so much here that needs to happen. I would hope that this wouldn't be a 50-50, that this would be, a percentage that was more to our favor, and that perhaps even a break in the interest that we're doing, and that we would only have to carry half that load with our county bonds. I think I'm speaking in terms that are not realistic. I can understand through this conversation that other cities have already given, for the most part, and in many cases, the farm away. So we're doing the best we can in what we have to work with. But it is disappointing that we're paying so much in interest when that money could be put in other places in helping people. For what that's worth, that, I guess, is what I'm asking. If in the modeling of choices of finance, if that ever came up from either party to help this county in achieving the same goal in these tenant upgrades that's being proposed.
Mr. Chairman, to the councilwoman, I really appreciate your comments. We did analyze our choices and our alternatives very carefully, and worked very hard in our discussions with the Cavs. The negotiating sessions were long. There were many of them. And as these things go, the county staked out its position. The Cavaliers staked out their position in terms of trying to protect their place among their brethren as well. We recognize that, and we know what else goes on in the industry. And in the end, our direction from the executive was to pursue these arrangements.
Thank you.
Thank you. Final question from Councilman Conwell, and then we're going to take a short break before the meeting begins at 5.
Through the president to Mr. Arthurmath, I'm sure that you're aware that some departments were cut 10% in the county's current biennial budget, which were initially an impact on services for our residents. In your current capacity, have you had conversations with the administration in relation to the county's main HHS priorities in relation to the Cavs arena?
Mr. Chairman, to the councilwoman, we're in regular conversation with the administration and many departments, including fiscal and OBM, with regard to a broad set of county programs and county directions that come my way. And as I said previously, we did our best to try and minimize the impact on the county general fund. There could possibly be some impacts on the county general fund. There will be impacts on the 0.25% subfund, no doubt about that. So the capital funds available for the convention center and the hotel are less than what they would be otherwise. And as the administration's aware, I've been very hawkish on maintaining necessary capital funds for those county facilities. But we take that into consideration the best we can in reaching this arrangement, as well as meeting the other priorities that are provided from a financing perspective to me.
I could go on forever, but I'm going to let us all have a break so we can continue.
Thank you. Thank you for your time today. It's been an interesting 3 hours, and the committee of the whole is adjourned. We will begin the council meeting at 5 o'clock.
Do you want me to